welcome back to the Rave Social Podcast. I'm your host, Jaden, and today we have the wonderful TaxSavvy. Savannah is so awesome. She has a master's degree in accounting. She's an accountant, but she also has some courses that you can take if you're a business owner to understand taxes, to understand bookkeeping, and to just better understand like the finances in your business. She is literally incredible. She saved me like hundreds of times. I would probably be bankrupt without her. I don't know. I couldn't live without her. And we're so excited to have her. So, Sav, why don't you tell us a little bit about what you do and kind of how you got here?
Okay, hello. My name is Savannah, and I'm the owner of TaxSavvy, which is basically an education brand or I don't even know, my brand that I teach people about taxes. And I do taxes, I do bookkeeping, I do all of that type of stuff. I love to talk about wealth and all of those different things within my line of business. And the reason why I'm so interested in the more educational piece of this is because I feel that a lot of business owners can really benefit from the education side of learning about taxation and how business taxation works, and really developing that knowledge can actually save them for the rest of their life, because you're going to be taxed until you die, basically. So
isn't the quote like nothing's certain besides death and taxes?
Yes, yes, that's exactly right. There's nothing certain in life except for death and taxes. So I just think it's so important for people to learn about this. And that's kind of why I took off in this education space, is because I really want people to learn rather than just submit their tax returns to their CPA, have them done, and then that's it. And then they're like, I want the strategy, but strategies don't really help people unless they understand taxes. So that's a really long version of who I am and what I do.
We love it. And I feel like you're exactly right. I mean, before I was a business owner, I just worked normal jobs and had a W-2 plus some commission stuff, which was the only weird tax thing that I had. But now being a business owner, I understand how valuable it is to know about taxes, because it will impact like literally your daily decisions that you make with your business, and understanding that strategy is just so important, which is why I'm so glad I have you, because I'm like, what's happening? What is this? Like, I don't understand these things. And you're always so good at explaining it. And you're just really good at what you do. So we're excited to have you. To jump things right off the bat, what is the biggest mistake you see business owners make as far as taxes?
Okay, that's an awesome question. And the biggest mistake, honestly, is just waiting to the last second. So many times I see business owners like, oh, it's April 10th. My taxes are due April 15th. I haven't done any of my bookkeeping. I have no idea how much money I made, how much money I spent running my business. And now I need to submit this to my CPA, and I'm behind, and I didn't save any money for taxes. And that kind of sounds like a crazy situation, but I'm not even kidding you. It happens way more often than not. And that is the biggest mistake I see people make. So if they could just do a little bit of planning, a little bit of preparation, that would go so far into helping them each year with their tax preparation.
I mean, I can't even imagine. This was my first year really having to be like on top of it. And you taught me everything. You're like, get QuickBooks, do this. And even my books were so messy, and I was so glad that I had you, because I was like, I don't really even know what's going on. And if I had waited until the last day, I would be so screwed, because I had to do like a lot of work. I mean, it took a couple hours to just figure out how to get it all to match. So I can't imagine. That would stress me out so bad. So yeah, be prepared, you guys. Also, something that you have taught me about is quarterly taxes. So why don't you tell us a little bit about that, and like how to know if you're in the space where you maybe should pay quarterly taxes?
Sure. Yeah. Okay. So this is a huge topic for new business owners, because I say you need to pay quarterly taxes, and they're like, why? What the heck is that? Like, I thought taxes were due April 15th. So a huge misconception out there is that taxes are due April 15th. That's not actually true. It's just a reconciliation of all of your income and expenses and all of your taxes that you paid that is due on April 15th. So you may need to pay a little bit more. You may get a refund back. Taxes are actually due quarterly throughout the year. And a lot of people who have like W-2 jobs or they're employed by someone else, they don't know this or they don't need to know this because their employer is submitting taxes on their behalf every 2 weeks. So it's not anything that anyone who has an employer needs to know. So most people who are entrepreneurs come from being employed to now they're self-employed. So this is completely new to them because they don't have an employer submitting that tax for them every 2 weeks or quarterly or whatever it is. They now owe these taxes quarterly to the IRS. So, the thing is about these quarterly taxes is if you don't pay them, don't panic. The IRS is not going to like put you in jail or anything like that. You may get a little bit of penalty for underpaying taxes quarterly, but they're not going to throw you in jail. Nothing crazy is going to happen. You may have to pay a little bit extra money in taxes. But yes, just so you know that April 15th, your reconciliation is due.
Okay.
So even if you extend your return to October 15th, you still have to pay as much as you think you owe by April 15th. Wow. That's another thing. Yeah, so it's a little crazy. So I want you to change your mindset and thinking, okay, my taxes are due all year long. They're not due April 15th. It's just my reconciliation, which is what your 1040 or your business tax return is that you're sending into the IRS.
Wow. I feel like that's going to help so many people. But that made me think of something. Honestly, I am scared of the IRS, like for real. For as long as I can remember, I don't know what my parents did to traumatize me. Just kidding, mom and dad, if you're listening. But I don't know what they did, but I'm like, the IRS is so scary. And so my question for you is, what can you do that will make you go to jail?
Okay, so I have to be careful here. I mean, basically just be super dishonest.
Okay.
They're going to throw me in jail. Just kidding. I mean, I see very little people actually go to jail for tax fraud. I've never seen anyone in my career just because, I mean, I haven't been in it super long. And also I usually don't work with that kind of people. But the thing is so little of people get audited. And then the people that do get audited, like generally what happens is the auditor will say, hey, I want to see this information. You send it to them. They approve it. You're good to go if it's legit. Yeah. So if you're running your business honestly, you have true deductions, you have all that type of stuff. You're basically just being honest. That's all it comes down to. You're working with someone that can help you take advantage of all your deductions and stuff like that, you're going to be just fine. It's usually the people who start being too greedy and too dishonest or just flat out don't file tax returns that usually run into trouble. And I've seen a little bit of that. One of the biggest things that I feel like that's a big fear of people is the IRS. I'm scared of the IRS. I'm scared they're going to come take me and put me in jail. They're going to take all my money out of my bank account. And the truth is as long as you're just doing your best to make sure that everything is legit, you're going to be just fine. Yeah. You go under audit, you submit the stuff, it's going to be okay. It's only if you're being blatantly dishonest that it's going to,
hurt you.
Screw you up a little bit.
If you do go through an IRS audit, they're not going to they don't audit you, say they need every single piece of information. They'll just audit sections. They'll be like, what about this or that? Is that kind of how it
completely
goes?
Depends. Yeah.
Oh my God, they're so scary.
Sometimes they'll look into every little thing and sometimes they'll look into just a few things. It just depends on, how big they think the discrepancy could be. Yeah. And this is maybe a plug to a few people out there who are running side hustles and aren't reporting any income or anything like that. The IRS can confiscate your bank accounts. They can look at the money going in and out. And that can be scary. As long as you're doing everything right, that's not scary at all. Because you're like, yep, this went in, best one out. Look at my QuickBooks. It matches exactly. We're good to go. But for people who are not like reporting anything, it can be really scary. There was this lady down here in this town where I live that was a photographer, and she didn't report any of her income for 5 years. The IRS figured it out. They went and looked at all of her bank accounts. She owed like thousands and thousands of dollars in back taxes because she didn't file anything. That is the biggest like situation I've heard of in my career, but that's because she just flat out didn't report anything. So as long as you're reporting stuff, you're good to go. And I really don't think the IRS is as scary as you think it is. It's just one of those things where as long as you're honest, you're going to be okay.
Yeah. Okay. I don't know where that trauma came from, but to me, the IRS is scary. Also, I feel like everyone feels this way, but it's like, hey guys, if you know all of this, why don't you just tell us how much we freaking owe so we can move on with our lives?
I know, right? I mean, and I really don't know the answer to that because the IRS receives transcripts. They know who's paid you. You know what I mean? They know how much interest you paid. They receive all that information. You can order a transcript from the IRS to see what they have on you for income for the year, so who knows? I don't know why they do what they do. Our tax laws are strange.
They're trying to trick us, I feel like.
They are what they are, I guess.
Yes, they really are. Okay, that's actually really helpful and leads me to another question. So, what can business owners do to save money on taxes? And I feel like there's also this misconception that like you should never pay taxes, but that's not actually true. So, why don't you tell us about that?
Okay, I love that you bring that up. To answer your first question, what can business owners do? I think mainly it's just the awareness aspect. What can I write off? Am I keeping good records? Am I keeping meticulous records of the different things, of all the income I've earned, all the income I've let go of, all of the expenses I have? That's going to be the best way to help you reduce your taxes is just your record keeping. For example, like I had a client a year ago that they had their QuickBooks ready to go and they're like, hey, will you just look at it with me real quick? But I think it's ready. And I was looking through their QuickBooks and they had missed like 7 months worth of their credit card statement. Like it just was not there in their QuickBooks. And I'm like, you guys are missing like 7 months. This doesn't reconcile. This doesn't pan out. And they're like, oh, well, you put it in there for us. I put that in there. That gave them 17 grand extra of tax deductions that they were going to miss out on.
Oh, if they did how could you forget that? Not me.
Right? Right? I know. It takes a different kind of personality. But I just think that's the biggest thing is I'm just going to plug bookkeeping and record keeping here for sure. That's going to be the biggest thing as far as making sure you're maximizing your deductions. And one other thing I want to say right now is tax avoidance is legal. And what I mean by that is avoiding as much tax as possible, right? You want to do that. You want to maximize your tax deductions to the fullest extent in most situations. However, tax evasion is illegal. That's when you truthfully go and evade taxes. So you're literally just not even reporting your income. So that's something I want to make you aware of. It's okay to find as much deductions as possible. It's not okay to not report income and evade taxes. So to answer your question about sometimes it's okay to pay taxes, is a lot of business owners just think, oh, I'm a business owner now. I get to write off everything. I'm not going to pay taxes. I'm like, that's not exactly how it goes, right?
I've never paid more taxes in my life, I feel like.
I know. And that's totally true because as a business owner, you are now, subject to self-employment tax. If you have employees, you have to pay payroll taxes. There's so many different things. But the thing about paying taxes is everybody has to do it. And there's going to be some CPAs that are listening to this out there and be like, oh, that's such a cop-out to say. But I'm like, it's true. Everybody has to pay taxes if they're earning money.
Yeah.
And the second thing about it is if you're paying taxes, you're earning money, and that's a good thing. We want to have a lot of ordinary income. We want to see that money flowing in because the truth is you can't invest your money into other passive tax activities without having your ordinary income.
Yeah.
Okay. So you can't invest in real estate. You can't invest in stocks. You can't invest in other businesses without that ordinary income stream. And it makes it really difficult if you don't have the ordinary income coming in to maybe shift it over into those more passive things. So that's
Yeah.
another plug for, you want to maximize your business, right? I want people to make and earn as much money as they possibly can in their business. But to do this, one of the caveats is you have to pay taxes. So it's just one of those things about being a smart business owner and really leaning into that education piece and working with their CPA to understand how much I need to save, why I'm paying these taxes, and what I can do to minimize them if possible.
Yeah. And that's where I feel like what we were saying at the beginning, as far as like tax strategy, it's like important for you to know that, because something that I learned through talking with you and another CPA was like, if I want to buy a house, I need to pay myself more money, which means I have to pay more taxes, like through payroll tax. Because I want to show that I make enough money that I can qualify for a mortgage. And that's totally a tax strategy, because then after I buy that house, I might dial back the income that I report on my W-2 for my business to save more money on payroll taxes, right?
Right, exactly. Yeah, a lot of people forget that piece of it too, is they want to pay the least amount of money in taxes, but then they want to go get a loan. And loan officers don't necessarily like to lend money to people who show no income at all. In fact, they don't like to do that at all. So
they're like, nope, you don't make any
yeah.
money.
Yeah, so it's important to be very strategic about your tax situation, especially when you're trying to make big, smart purchasing asset moves like that, like buying a house. Maybe you're funding a new portion of your business. Maybe you're buying a vehicle, all those types of things. You just have to be very aware of your strategy going into it, as also try to avoid as much tax as possible.
Yeah. So what advice would you give to business owners as far as their tax strategy goes if they are looking to like buy a house or make a move like that, or invest in real estate, even if it's not their primary residence? What would you say, like, as far as tax strategy goes?
Sure. Yeah. So the first thing I would do is I would work with a loan officer who primarily works with self-employed individuals. Um, I've worked with a lot of loan officers with different clients, and some are better than others, just like with everything out there. You're going to find some that are really educated in some aspects, and some that aren't, and some that don't understand the self-employment thing, and some that do. So just make sure you're working with a really good loan officer that understands self-employment and people who are self-employed and have self-employed income. So that's the first thing. Number two would be to analyze your situation. What I mean by that is, what kind of house are you trying to buy? Like, how much money are you trying to qualify for? That would be the next thing, is then to talk to your loan officer and say, how much income do you need to see for me to qualify for this amount of money to put down on a house, or whatever it is. Say the house you want is $1 million. What does my income have to look like to buy a house for $1 million? And then you can have that in your head, and then you can start to plan, right? So you can start to increase your business activity so that you can have more revenue coming in, so you can show more income. You can start to, maybe you've found that you're doing, like, you have certain expenses or softwares that aren't serving you anymore, but are providing you a deduction. Maybe this is time to let go of them. So we don't have a write-off anymore. So that reduces our write-offs. Another thing to be really careful about on this one too is not reporting write-offs is also not legal. And I know that sounds weird, because the IRS is be like, what the heck? Like, just pay us as much as you. Yeah, like the IRS, weird, right?
Yeah,
but
that
it's
is
true.
weird.
That is very odd. But you honestly, you have to report all of your deductions. You have to report all of your income. So that's another thing to be aware of. So don't just like write off random deductions just because you're trying to lower your income. Be very strategic about that. I'm sorry, I said that wrong. Don't try to write off deductions to increase your income. You have to be really strategic about that, in that aspect. And then work with your CPA. Once you know how much money you need to earn, work with them, as far as your deductions go. Maybe you were going to buy a piece of equipment, but maybe we're going to shift that to next year so that we can show more income this year. Maybe you were going to prepay a whole bunch of different things, but we're going to shift that to next year. Different stuff like that would normally give you a deduction in that year will shift to the next year, which will help increase that income. So there's
Yeah.
a couple different ways you can do that, but I think the most important is working with a good loan officer, knowing how much you need to qualify for what you want, and then working with your CPA to get there, or your bookkeeper. A bookkeeper is a really awesome person if you have a separate bookkeeper that can help you
Yeah.
meet these goals as well.
Yeah. Okay. That's all very, very helpful. And what role does like being an S corp or not being an S corp, which if you don't know what that is, we don't have to dive way into it because it's a little bit complicated, but what kind of benefits are there? Like if you are trying to buy a house, should you be an S corp or does that not really matter?
Okay, that's a good question. So it kind of just honestly depends because so for example, I guess I should explain what an S Corp is for people out there who aren't really sure. So I'm sure if you dove into some tax strategies and stuff like that, you've seen the term S Corp places. And what an S Corporation is it's a tax election that you can make on either your LLC or your C Corporation that allows you to be taxed as an S corporation. Okay, you can't just set up an S corporation. It doesn't work like that. You have to make a tax election. And what this allows you to do is many people who are self-employed are familiar with self-employment tax, that ugly, dreaded
Spicy.
15.3%, right? Disgusting. So, what this S Corp allows you to do is you get to avoid that self-employment tax when you become an S Corp. So you no longer have to pay that 15.3% on your net income at the end of the year like
That's
you would as a
slay.
Schedule C. Such a slay. And it's a huge strategy for a lot of people who are making about more than 30 grand of net income. I usually don't recommend it for people who are less than that because the cost of filing for an S corporation and the payroll fees and all that type of stuff usually outweigh the tax benefit if you're not making more than that. However, one caveat to having an S Corp is that you have to pay yourself, the owner, a fair wage for doing your job. Okay? So, you're doing that, by the way. So, you have to pay yourself a W-2 wage from your S Corp for doing your job. And the reason for that is because when you become an S Corp, you get to avoid that 15.3%, right? But when you have to file payroll for yourself and issue yourself a W-2 wage, you have to pay that 15.3% or that FICA Medicare, Social Security on that portion of your wage.
Wow.
So there's that caveat with the S corporation. So say, for example, you earn 100 grand and you take a $50,000 wage, you don't have to pay the self-employment tax on 100 grand like you would with a Schedule C or a single member LLC. You only have to pay the self-employment tax on 50% of it, that portion you take as a wage. And let me be clear here, self-employment tax is the same as FICA taxes that are payroll. That's why self-employed people have to pay self-employment tax, because they don't have to pay FICA tax because no one's paying them money. No one's withholding payroll for them. So that's where they link. That's where they come together. So S corporations are a huge strategy. But to answer your question about if it's going to help you out with a loan, it doesn't necessarily help. It doesn't necessarily not. So if you have a huge amount of money coming in as a Schedule C owner, you have 100 grand, which not smart. You should be an S Corp. But if you have that, a loan officer is going to see that and say, great, okay, you have 100 grand coming in of net income. That's a good amount of money. However, with an S Corp, you do have that wage piece, that W-2, which is a lot more. I want to say that loan officers like to see wages more than they do like just self-employment income, because self-employment income is very volatile, and your net income that they base things off, that can change every year depending on a whole bunch of different factors. But a W-2 income is usually a lot more steady. So they do like to see the W-2 income. So for that reason, having an S Corp can be beneficial. However, I don't recommend just like setting up an S Corp randomly just to get maybe a loan on your house. You know what I mean?
Yeah.
We just got to be a little bit more strategic with that. So.
Okay. I love that. What would you say is something about taxes that most people just don't understand? Like they just don't get it.
That's awesome. I think the biggest thing that people just don't get is why they're paying the taxes itself. Like,
oh, yes. I
everybody
don't get
has
that.
yeah. And to be honest, like, whether or not you agree with it, the reasoning is because the government has to fund itself, right?
Yeah.
The government has to fund itself. It has to pay its employees. It has to pay for its programs, all those different types of things. That's why, down to the core, that we pay taxes. However, whether or not you agree with that or believe taxation is theft, that doesn't matter because you have to pay it anyway if you live in this country. But another thing, yeah, I guess. I mean, we have lots of freedoms here. I guess that's the caveat for living in a free country. But another thing that people just don't understand is, I would say, the income bracket system. So a lot of people, you know, you'll hear them say, oh, I'm in the 24% income bracket. And they're like, I pay 24% of taxes on all of my income. And I'm like, that's not true. The income bracket system that we have here in the United States is actually a step. It's like, you got to think of it as like stairs. Okay. So you're climbing these stairs up the income bracket system. So at the very bottom, you have your 10%. And I believe that's like, it's usually like whatever, $11,000 or something like that.
Yeah.
Don't quote me on this, people.
I feel like I saw
don't know
that
in my head. Something like this. I'm going to use examples because I don't remember them off the top of my head. But you're going to have this 10% bracket, okay? And you're going to pay 10% of taxes on your income that fits within that bracket. So if you've made $100,000 and the 10% bracket's $10,000, you're going to pay 10% on $10,000.
Yeah. Okay.
Okay. And then you're going to move up to the next bracket, which is like, oh my gosh,
we'll just say it's 25,000.
Right.
We're just going to make it up.
It's 22%. That's the bracket. Oh my gosh, 22% bracket. And then whatever amount of your income fits within that bracket, you're going to pay taxes on at that percentage. And then you move up to the next percentage. So say that's, you know, you're clear up to your 32% bracket. That's whatever income is between the bracket before it and the 32% bracket, you'll pay 32% on that income. And it's kind of hard to explain without showing visuals and stuff like that. You just kind of have to think of it as like you're climbing stairs. You're never going to pay, like, if you're in the highest income bracket, 37% on all of your income.
Like,
that's not how it works.
One thing I've seen, like, on TikTok is people will be like, you don't want to get a raise because if that pushes you into the next tax bracket, then you're actually losing money. But it's like, that's literally just not true because you're only paying that higher percentage on a very small portion of your total income.
That's exactly right. Yeah. Whatever portion of your income fits in that bracket rate. So say it's $10,000, you get a $10,000 raise, that pushes you into the 37% bracket. You're only paying 37% on that 10 grand, not everything below it. And so you're totally right. There's a lot of misconception out there around that subject.
I feel like I just thought of another misconception. I've heard, this is all stuff I hear on TikTok. I feel like TikTok, we can't trust their tax advice.
You can't trust tax advice on TikTok.
One thing that they said, like, you should never pay more than 10% of your total income in taxes. That can't be right, is it?
I mean, no. Because you can so there's something called the marginal tax rate, and that goes along with your effective tax rate. So your effective tax rate is going to be your tax bracket. Okay. Yeah, I'm in the 24% bracket. That means the top of my income is landing in the 24% bracket.
Okay.
But my marginal rate of tax could be like 11%, which means I take my total taxable income and I divide it by my total amount of tax. That could be like more like 11% because, like I just explained, you're in this, you know, it's stairs. You step up. It's not just like here and then here you get taxed so much depending on how much you make. So generally, I mean, I've never heard of that advice before. And I would say that if you're aiming for that, then you're probably not getting raises. You're probably trying to cut profits or something like that to make it fit in that little square of 10%. But generally, I've seen marginal tax rate rates from, 6% up to 24%. It totally just depends on your individual situation.
And like what happened that year? Like maybe you sold your
Totally.
house, or like you had a kid, or you got, does
Yes.
getting married change it? I feel like it does.
I mean, yes. I mean, getting married, you're in a whole different bracket group. There's different brackets for married filing jointly and married or in single. So yes, anything like that can totally change it.
Okay, another misconception. Just because it's a freaking tax deduction doesn't mean you can afford it. We've talked about this
Totally.
before, but I'm like, even I know this and I don't know that much about taxes.
I mean, yes. I could scream this one from the rooftops. Like, people all over, I hear them say, well, I'm just going to buy it because it's a tax deduction. I'm like, great. Well, that's still money out of your bank account that you can't afford. You know what I mean? Like, and you don't necessarily need this.
Yeah.
A lot of people are just like, well, it's a tax deduction, so it gives them an excuse to spend their money. So a lot of the tax advice you'll see out there, especially at the end of the year, is just, buy a vehicle or buy a piece of equipment because that's a big expense for your business, therefore a big write-off, so you'll pay less taxes. And that's great if you need that vehicle or if you need that equipment and if you can afford it. Okay. A lot of people are just out there buying random crap for the tax write-off. And I'm like, that is still money you had to spend. If that piece of equipment is $5,000, that $5,000 is eventually going to leave your bank account. I mean, it could if you paid for it in cash. If you pay for it in a loan, even more then, because you have interest on top of that. And maybe your tax bill is only going to be 10 grand. So now you have $15,000 leaving your bank account, and you can't afford it when you were just trying to save taxes, and maybe you saved like a couple $100s, and that's great. Yeah. But if you don't need that piece of equipment, it's generally not worth it. So I would say if you're trying to make fast tax decisions, I guess the thing is I would never make decisions based on tax. And that's kind of weird to hear from a CPA, is a lot of people will make their business decisions based on how it's going to affect them tax-wise. And I'm not talking about like making an S election. That's completely different. That's smart. You want to do that, and that will affect you tax-wise. I'm talking about spending money. So you don't want to go out and buy a rental for the tax benefits, because chances are there is no tax benefits for you if you're not a real estate professional. You don't want to go out and buy this G-Wagon that you can't afford just for the tax benefits. So what I'm trying to say here is think through this like financially first. Like, is this going to benefit my business? Is this going to increase profits? Is this going to make me more efficient? Is this going to help me eliminate expenses? If you meet all of those things, then absolutely go out and buy that vehicle, buy that equipment, because you need it. It's going to help your business thrive. Yeah. If it doesn't meet those situations or if it doesn't meet that criteria, then you don't want to purchase this equipment or this vehicle because you're just doing it for the tax write-off. So my biggest plug here is don't make decisions based on taxes when it comes to spending. It can be part of this decision-making process, but it's not going to be the main reason you make decisions.
Yeah, I'm just on a freaking roll with misconceptions right now. So I feel like another one people have is like they will write off like anything. Like I've met people and they're like, yeah, we like went on this vacation. Like it's a tax write-off. And I'm like, wait a second. Is it? Like, I don't think so.
Okay, so it's great you bring this up, because here's the thing. Most things are write-offs only if they benefit your business or they are exclusively used for your business and they're ordinary and necessary. Okay, ordinary and necessary is straight on the IRS website. That's what they say about expenses. So if you are going on a trip and it is ordinary for you to travel for your job and it is necessary to make a profit, then that's a write-off. However, if none of those business criteria are being met, it's not a write-off. So a lot of people, so here's an example. I'm a CPA. I have no reason to be writing off my trip to Florida. No reason whatsoever, because it's not going to benefit my tax and it's not my tax practice. It's not ordinary and it's not necessary for me. However,
Yeah.
if I was going to Florida to maybe just attend a conference about taxation and get more knowledge and networking, that's a completely different situation. But I think what you're talking about here is people who just travel for vacation and write it off.
I think they just think in their heads like the business is going to pay for it, but it's
Right.
like if the business is going to pay for it, the business just needs to pay you for
Right.
it.
Just
Right?
because your business pays for it doesn't mean it's a write-off all the time. I think that's the key here, right? It's just because
Yeah.
you pay for it with your business account doesn't mean it's a write-off. It still has to meet the test. It still has to be ordinary and necessary for your business. However, to spin another example in the other direction. So say you're a photographer, okay, you have a client that is getting their photos done in Florida, same thing. You have to fly there to take the photos for the wedding and you have to fly back. Is it ordinary necessary for a photographer to travel for business? Absolutely. Was it necessary for this photographer to fly over to Florida to get that profit? Absolutely. So that's a complete write-off, right? I mean, and there's other nuances as far as like how many business days and all that type of stuff, and we won't get into that here. But I just really think that business owners need to sit back and think, is this ordinary and necessary for my business? And if it is, then it's generally 100% of the time a write-off. If it's not, then it's probably one of those gray area ones that you'll want to talk to your bookkeeper or CPA or accountant about.
Yeah. Okay. What about if so another one. I can't talk right now. Another one I was thinking of is this. Actually, it's just a problem with me, I think. So in my head, nothing is ordinary, or I'm like, do I need to fly to Florida to photograph that wedding? Couldn't they just come to me? So I feel like you can't be psychotic like me.
You can't overthink it. Like, don't overthink it.
Me, queen of overthinking. So I'm always like, I don't know. Like, there's things that I'm like, I guess I could write that off, but like, ooh, I don't know. Did I need it? I don't know. But I think other people are a little bit more like, yeah, it fits, and they'll put it on their taxes, which
and I think maybe to speak to that a little bit is what I see mainly in that area that gets a little bit concerning is the personal stuff. So I'll see people say, well, I am constantly in front of cameras, so I need to be able to write off my hair, my makeup, all that type of stuff. I mean, it is ordinary to want to look good on camera, but it's not necessary in the eyes of the IRS. I mean, I agree with you. I think it's necessary, my taxpayer, but unfortunately, the IRS doesn't. So it's
I'm gonna go to court with them and be like, it is necessary because listen, how you look on camera literally changes your brand.
It's true.
It's just true. So it's necessary.
Here's the thing is the influencer landscape is kind of changing this whole thing with the IRS because before only celebrities were able to write off their hair, their makeup, their nails, that type of stuff, because that makes sense for a celebrity. Like, that's who they are, right?
That's their brand image.
Yeah, exactly. Their face, everything. However, for some of us that are more like, I'm on camera a lot, but it's not my main job, or maybe I'm an influencer, but I still get this stuff done because I just like it. That's where it gets a little gray. And out there in the influencer industry, it's hard to say because there's some CPAs that are like, yeah, write all that off. You're an influencer. You have to have that. And there's some that are like, hard, no, you're not a celebrity. And there's not really a fine line written there yet. So I think that's one of those things that you just have to work with your accountant on what you feel comfortable with as the taxpayer. Honestly, it comes back down to the taxpayer. I can advise people all I want on things and what's deductible and what's not. But at the end of the day, it's up to the taxpayer for them to decide what they want to write off and what they don't.
Yeah.
Of course, me as a CPA, I can use my discretion and say, okay, that's blatantly illegal. I'm not going to work with you. I'm not going to put my name on anything you do. But there's some situations where I say, you know what, here's my advice, but it's up to you to decide. And I'm okay whatever way you go because you're the taxpayer. You go under audit, you're going to have to prove that.
Yeah,
So,
like you're the one that's on the hook. You're the one
right.
that has to hire the lawyer.
Right.
But I feel like also a lot of tax law is just based on like precedent, right? Like it is
Mm-hmm.
based on kind of what happens in a courtroom. Like I
Mm-hmm.
think there was a celebrity or a music group. Sorry if you know who I'm talking about. I can't think of the name. It's not Queen, but it's in that genre. And I think they were like writing off their like outfits for their shows, and it went through this big process, and they were like, no, that is legal. Like their lawyer was like, it is legal because they have to wear these costumes to perform their songs, whatever, blah blah. And I bet you we're just going to see that in the influencer world where
Yes.
it is. And like, I mean, obviously, in my opinion, I'm like, yeah, all of that stuff is tax deductible because I could literally show you examples. Like on TikTok, I could be like, look, this account is like not performing because their image is not like cohesive with their brand or whatever. Like I
For
could
sure.
totally explain it to you, but it's like, is that going to win when there's a judge? Like we'll have to see
Yeah,
because I
you
bet it will
just,
come up.
I'm sure it will, and especially in the future, definitely that's going to come up. But another thing that the
Yeah.
IRS says about stuff like that, and maybe the IRS doesn't say this, maybe I've heard it from other people or court cases. I gotta be careful there.
IRS, if you're listening, don't
Yeah.
sue us.
Yeah, please. One of the things that they say is like, especially for like clothing and stuff like that, is if
Yeah.
you're going to wear that clothing outside of that photo shoot or outside of that video or whatever it may be, then it's generally not tax deductible because you're going to wear it outside
For another reason.
for another
that's not.
reason, a personal reason.
Yeah.
If it's literally a uniform and you only wear it to do your job, that's different. So
Yeah.
there's a little help that way with some people out there that are trying to decide, like, is my clothing deductible or certain things like that. Is
Totally.
generally the hard line is this required to do my job? So a good example would be like nurses. They have to wear scrubs. So,
Yeah.
Stuff like that would be a write-off for them if they are a self-employed nurse or whatever, like something like that. But for me,
so
like,
interesting.
I don't have to wear I can wear whatever I want while I work, behind my computer. So none of my clothes will be tax deductible. So you just think of it that way. So maybe that can help some of you and point you in the right direction.
Totally. I feel like people listening to this will use that advice. That makes a lot of sense. Oh my goodness. Taxes.
I know. Gross, right?
It's funny because, like I said, I've always been scared of the IRS. Honestly, I think my worst fear in life is like being sued. Like, I honestly don't know where that came from. If you're a therapist, please help me. But I'm so scared of it. I'm so scared to get pulled over. Like, I don't know what it is, but taxes fall in that same bracket for me for whatever reason. Probably because part of it is legal stuff. I don't know. But honestly, you've helped me get so clear, and your course is so good. I can tell everyone this because I got to see all the inside of it when I was helping you with some content, and it's really amazing. Just knowing and feeling confident in yourself that you have the tools and the knowledge to understand your tax strategy, and at the same time knowing when to get more professional help, talk to someone that does it for a living, is just so valuable because at the end of the day, like, it is your finances. It's your money that we're talking about. And that's so important in your business.
Yes. Yes. And it's so true. And a lot of times when I work with people, and some people are funny, but money is such like a topic that is so difficult for so many people, and it's
so emotional.
It's so emotional, which people say it's not emotional. Oh, it is. It totally is.
100%.
And it's so emotional. It causes divorces. It causes business partners to split up. It causes a whole lot of issues. It causes a whole lot of goodness in the world too. Like, money just is what it is. But I think that's the hard part that people have with learning about taxes or educating themselves that way, is it's just like, it's such an emotional thing for them. And like, when I tell people what their tax liability is like, I have to say so neutral. I mean, explaining how much people owe taxes is almost like telling them, that their dog died or something like that. Like, it's this horrible situation. And I'm sorry for those who have had their dogs die. It's terrible. But it almost feels that way when you are telling someone their tax liability, because it is so emotional and it's so connected to everything you do. You know what I mean?
Yeah.
So
Yeah, I was just thinking about that for you, like how scary it is to like, even just like when you're quoting someone for anything, like when I'm sending someone a bill for social media, I'm always like, I'm concerned about like their feelings about money, and you just can't be, because I'm sure you've given people a tax bill that's like
oh
100
yeah,
grand. And
oh
you're
yeah,
like,
higher.
you owe this. It's as much as a mortgage.
Yes, and it like I have to detach myself from it, just like a healthcare professional would.
And
And
if you're not prepared for it, it can feel very scary and detrimental. And
yes,
like, how am I ever going to get through this? Which is how you feel
yes,
when bad life things happen. So,
it's a hard thing because people are so like emotional about their money. They save
no,
so much, or they don't
I
save at
mean,
all, or you know what I mean.
I don't
It's
think
those difficult
you're wrong
things.
about that at all, because, like, I mean, I was just reading The Psychology of Money, and he talks a lot about how, like, when the stock market crashed, like, people were actually suicidal. Trigger warning. We'll put a trigger warning on it. But they actually were, or because of just money. And that's exactly what I'm saying about taxes. It's like, that's why it's so important, is because it is your money and it is your livelihood and your ability to pay your mortgage and drive the car you want to drive and live the life you want to live. And if you're not paying attention to your taxes and your tax liability, that can completely mess that up. So
100%.
it is scary. It's not just something silly that doesn't need to be worried about, but also you can plan for it. And there's a way to do it where like you aren't going to get yourself into a situation that feels life or death, because you've prepared and you understand it.
Yes, I mean, I absolutely 100% agree with that. And I've read The Psychology of Money, by the way, since you've said that. So I
So
totally know
good.
what you're talking about and how people are so connected to their money.
Yeah. So totally get
Absolutely.
that.
And one thing I need to mention, and one thing I've learned from The Psychology of Money, which is such a great book, me and Jaden will both plug that book for anyone who wants to read it.
Yeah.
Is you have to detach yourself emotionally from your money too. And that's kind of like a wealth thing that I like to talk about a lot, is you have to detach yourself from that money, because when you do lose your job, you have to be in a safe emotional state to say, okay, what's next? You know what I mean?
Yep.
What do I do from here? Not sit there and, go into depression or whatever it is that some people will do. And then on the flip side, if you earn tons and tons of money and it's some miraculous lucky streak that you hit, you can't be so prideful to think that you are untouchable, because anything could happen. So there's both
But
sides
they
to
talk
that.
about that so much in that book, about how people, he says, oh, I wish I could remember the quote. Dang it. But he says something like, people, oh no, I'm never going to get it. But it's essentially on the thing of just like, people think they're better off than they're going to be. And they also think they're worse off than they're going to be. Like, we tend to do it in both directions. And it's like, yeah, learning how to manage your money in a non-emotional way sets you up to be protected in both areas, so that when things get really bad, you don't fall completely off. And when they're really good, you know what to do and you know how to plan for that, instead of just like spending it all or investing it into something bad and then losing it all.
Absolutely.
So yeah. Okay, I have one last question for you. And it is, if you could give yourself, your younger self, a piece of advice, what would it be?
Okay, so I think the same advice that I would give myself now is what I'd give myself when I'm younger. And that is, you're not behind, you're just comparing yourself. And I know that's so cliche, like everybody says that, but it is so true. Once
I
you
think people say it
internalize
because you
that,
need to hear it.
yes, once you truly internalize that, I think it can make a world of difference in how you feel about yourself as an entrepreneur, how you feel about yourself as a partner, a friend, a wife, a mother, all these different things that you may be, a father, son, I don't know if there's men out there. But I think that if you were sitting there constantly comparing yourself to others in the entrepreneurial place, there's so many people out there screaming from the rooftops about how much money they made, how much money they don't make. It's just so hard to look both ways and not stay in your lane. So I think the biggest advice I would give myself is stay in your own lane, because there's so much you can learn from other people. But if you start comparing yourself, that's when it tears you down. If you use other people's experiences and livelihoods to learn, that can springboard you forward, right? Because that can give you something good to look forward to, or something, put in the work or the effort that you need to get there. However, once you start comparing yourself to these people, that's when it starts to damage you and your self-worth, your thoughts about money. And I even had an experience with this like 2 days ago. There was someone that I follow, and they were talking about how much money they made and how fast. And I was like, oh, that is so lame. Like, what am I doing? And then I think of like,
it makes you feel like you're doing something wrong.
Exactly.
Like, how come, like, I'm smart. How come I can't do that?
And that's exactly right. Like, that is such a dumb thing for me to think, but it's like, okay, like, I have a master's degree, I have a CPA license, like, I could figure that out. Like, why haven't I? You know what I mean? But I just have to chalk it up. Like, I can't compare myself to that person, because I'm also, in the meantime, I've also been married. I also have 2 kids. Like, there's so many different things that I have centered my life around other than my business that people don't know about, or that this person hasn't, or you know what I mean?
Yeah.
So there's just
you don't see all of that on social media, and you shouldn't have to. It's totally fine. But then you also have to remember that, like, that's not the full picture, and you don't know how much debt somebody has. You don't know how much like help they have from family, or you don't know what job they had before that. You don't know how much they're able to save, or how much their rent is, or why they need the car that they have. Like, you just don't know any of these things. And so when you compare yourself, you can't even compare yourself. You can't even, because you just don't have the information to compare yourself.
So true.
And one thing I learned recently was, like, when you're feeling jealous, instead of being like, oh, I'm like jealous of this person, and beating yourself up for feeling jealous, just understand that, like, that jealousy is either showing you something that you want or something you don't want. So you get to decide. Like, if you feel jealous, you can be like, am I jealous because I wish I was doing that? And if so, how can I do that? And then just make a plan to get to that place where you can do that. And then you don't have to feel jealous anymore.
Yeah, absolutely. Or on the flip side of that, decide that that's not actually a priority for you if you have other things going on. Yeah.
Just be like, am I jealous? Like, do I actually want that? And then maybe you don't actually want that. I've done that so many times where I'll be like, I do it when I see people traveling. I'll be like, I'm so jealous. Like, they went here or there. And then I'm like, I've traveled enough to know that every time I travel, I get home and I'm like, that was rough. Like, do I like that? And
so
I totally
true.
still love traveling. I do love it, but it's like, maybe they're just making it look way more glamorous than it actually is.
Yes. And one more plug for this. I have an insider review to so many people's financial situations, hundreds of people's tax returns. And I can tell you that some of the biggest spenders and the richest looking people out there make nothing.
Don't have a lot of money.
They leverage their whole lives. You know what I mean? And then some of the actual wealthiest, richest people out there, in terms of tons of money coming in, you would have no idea. It's just all about how people choose to portray themselves and live their lives, exactly like you said. So you have no idea what other people are going through, how much money they make, what they're doing in their lives outside of their business.
And they might be happy living their life with all of that debt. I think we like shame people too. We're like,
yes.
They're in so much debt, and it's like, I don't know. Do they like it? Okay, like,
sure.
Cool.
Are they happy?
Like,
great, I guess.
Yeah, like, are they on the brink of bankruptcy? Maybe, but they're vibing. So like, whatever. It's just hard not to want to like be curious and be interested in everyone else's like finances and stuff. But like, at the end of the day, it has to like be. This is my favorite part of The Psychology of Money. He says at the very end, you have to make decisions with your money that make you sleep better at night.
Yes.
So if having 100%. A huge savings account makes you sleep better at night, do that. If driving the most awesome car ever, but you have no savings account makes you sleep better at night, like, do that. It has to be like for your health and your mental health. So,
and I really love that advice too, because sometimes that goes against the grain of normal financial advice. Like,
totally.
Sometimes if you have a really low interest loan, people will tell you not to pay that off because that's free money, or not free money. It's just cheap money that you can use somewhere else. But because it provides you peace of mind to pay that off, pay it off. Like,
Exactly.
exactly like you said, do what makes you feel better and sleep better at night with your money.
Yes. I love that. Oh my gosh. Thank you so much for coming on this podcast. It was so helpful and so awesome. And I feel like we're going to have you back and talk about wealth next time because we didn't even
Yay.
really get to touch on that till the end. But you're so awesome. We're going to link her course and all of that in our show notes so that you can take Savannah's course. It's so awesome. And we will see you soon on the pod.
Thank you so much for having me, Jaden. It was a blast.